GameStop, Roaring Kitty, Moaz, It's the Future Bro, Melvin Capital, all the drama that has swirled around these meme stocks. Can it continue? Will it continue? Will you make 10x on your money, 100x, 1000x by buying GameStop or AMC? Well, I'm here to break it to you. You're probably not going to. But in this video, instead of just bashing on both of the stocks, I'm going to do a comparison of these two companies because a lot of people think they're the same thing, and they really aren't. One company is in a better position, at least now, to survive into the future. Another company is potentially at risk of bankruptcy. Now here we have Roaring Kitty, who was all about GameStop, and I think he made millions of dollars. Lucky man, good for him. Then we have an AMC shill named Trades, who, I don't know how much he made, but he probably made a fortune just from the fame and celebrity that he got from pumping AMC. Good for you, buddy. But now this bussy boy has gone ahead and deleted the vast majority of his AMC videos. So he makes a fortune off of his fans pumping a trash stock. The stock plummets. There was never a Moaz. He lied to you. He misled you. And then he deletes all his videos. Okay. And there was a man named Christopher Bell, also known as Strongman Personal Finance, who was trying to warn you, hey, both of these companies aren't doing too hot. They aren't doing too great. But I never have actually compared the two. And I'm going to tell you which one would interest me more if I had to choose between the two of these. And I want to be very upfront here. I'm not buying either of these stocks. I'd rather put my money in VT. But if I was forced to choose one of these companies, well, I'll let you decide which one I would rather choose, but I'm not going to buy any of these, and I personally think you should stay far away from both of them. So let's go ahead and look at GameStop's financial statements. So here's GameStop up 46% in the pre-market. Now, they just had earnings, and they've actually done some pretty great things. While their revenue was flat year over year, it was roughly $2.2 billion in the fourth quarter. It's actually not showing here. They actually turned a profit. How do they turn a profit? Well, they cut their cost of revenue right here. This is the cost of the stuff that they're selling. So all the games and blah, 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 blah in the stores. And they cut their operating expenses, and that allowed them to turn a profit. Because as you can see, they've been running loss after loss after loss after loss after loss after loss after loss. And it's finally nice to see this company turn a corner. Now, does this mean they're going to continue to become profitable into the future? No, it doesn't, okay? We can see the trend that they sometimes have profitable quarters here and there, but in the aggregate, they've been losing money hand over fist ever since it looks like late 2016, okay? This is a slowly dying company, but at least they have a chance of profitability. Now, for the revenue overall, we can see the revenue is collapsing. It's gone down and down and down and down and down over time. Or, I mean, even best case, it remains flat. I don't see massively expanding revenue for this company, okay? Now, let's compare that to AMC. AMC really ain't doing too hot. Now, they have year-over-year revenue decline. That's right. Their revenue is actually going down. Now, you see all these crazy numbers for revenue growth, right? Like, oh, man, look at that 2,000% revenue growth. How could you go wrong with that? Well, that's because that's off the bottom of the pandemic where the theaters were closed, okay? So if you go up from $1 and then you make $5 the next day, oh, it's a great gain, but you're still only making $5. That's basically what's happening here. But we could see the long-term trend of this company is that their revenue had a brief spike in 2017, 2018, and then it's been going down pretty significantly, and they're having a hard time recovering from the pandemic. Now, when it comes to profitability, they're not even close to making money. Not even close. Loss after loss after loss after loss after loss. At least GameStop managed to turn a profit, okay? Doesn't mean it's sustainable, but at least they turned a profit. AMC, no baby. Not good at all, okay? Next, we're going to compare the balance sheets. So the balance sheet is a snapshot at a point in time. and it shows a company's assets, liabilities, equity. Now, what does GameStop's balance sheet show us? Well, the first thing I like to do, this is a very quick check to see if a company's in trouble, is look at their shareholders' equity. Just go straight to shareholders' equity. Is that number negative? Because some companies have negative shareholders' equity. What does that mean? That means they have more debt than assets. So right off the bat, if you see a company that has negative shareholder equity and it's getting worse over time, they're already underwater. They're already technically bankrupt, okay? So GameStop has positive shareholders equity. I mean, that doesn't mean it's a great thing. We're going to go into more detail. Let's compare that to AMC. We go down to AMC. Oh my Lord! They have negative equity. They have more debt than assets. Imagine if you had 10,000 of debt and you had 8,000 of assets. That's not good. Okay, you don't want that on your personal balance sheet, and you definitely don't want that on a company's balance sheet. Now, there's more components of shareholders' equity, but we can see over time it's been going down and down and down and down and down and down and down, and we can see that's because of retained earnings, which is the company's profits going down, 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 down. And we can see common stock, which is diluting, splitting up ownership of the company amongst more people, going up and up and up. But even with the dilutive effect of common stock issuance, the shareholders' equity overall is still going down. This company is underwater. That's why they're trying to issue those ape shares, because they want those ape shares to dilute the shareholders so they can pay off these long-term debts. They need to get rid of this long-term debt because they are underwater. You compare that to GameStop. Okay, they've been issuing common stock as well. Not good. They have negative retained earnings. At least recently they had positive retained earnings, but now they have negative retained earnings. So they're losing money too, but at least they're not underwater with debt versus assets, okay? Huge, huge difference between the two of these companies. Next, we're going to look at cash flow, okay? So GameStop has negative operating cash flow, which is not good. Okay, you want positive operating cash flow, and the reason that is because you want to sustain your business operations with cash from your operations. You don't want to issue shares or have to sell long-term assets to have to finance your day-to-day operations. So they generally have negative cash flow. Okay, so that's not good for either company. Now we also have AMC. Let's see what their cash flow is. They have negative cash flow as well. So on a cash flow standpoint, they're pretty equivalent. Now, GameStop, it seems like they don't have nearly as many capital expenditures. Now, if we go back and look at their free cash flow, let's see what their free cash flow margin is. So we got a little bit of negatives and positives. Okay, it kind of fluctuates, but at least sometimes they have positive free cash flow. Let's go look at AMC's. AMC's free cash flow margin has been consistently negative. Oh, baby. I don't know what to say. Like, these are both clownish companies, okay? AMC is a joke. I tried to warn you. You didn't listen to me. You still insist that AMC is going to Moaz after it's already collapsed. How much has it collapsed? Oh, God. 75%. But at the end of the day, like, if I had to compare the two, GameStop at least has the potential to be profitable if they do stuff right. I don't know about AMC. I really don't. Okay? So that's kind of the comparison of the two. At the end of the day, both of these guys are kind of degenerate gambling clowns. But whatever you choose to do, I hope you find success. But maybe you should consider investing in an index fund. Talk to you later. Cheers!